Welcome to the Banker Lamp. Please enjoy the video.
In this video, I will explain how to choose Fidelity index funds. First, understand that index funds aim to match market performance, offering broad diversification at a low cost. Fidelity is a great place to find these, with many options available. We'll explore how to align these funds with your personal investment objectives and risk tolerance, ensuring you make informed decisions for your financial future. When selecting a Fidelity index fund, always check its expense ratio first. Aim for funds with costs well below 0.1% to maximize your returns over time. Next, examine the fund's performance history, looking at how it has tracked its benchmark over several years. This helps confirm its effectiveness in mirroring the market it aims to follow, providing consistent, reliable growth. Fidelity offers various index fund categories to suit different needs. A total market index fund provides broad exposure to the entire U.S. stock market, a great foundation. For global diversification, consider an international index fund. If you're looking for more stability and income, bond index funds can be a valuable addition, helping to balance your overall investment strategy effectively. To build your portfolio, begin with a strong core, such as a U.S. total market index fund. Then, strategically add international equity funds to gain exposure to global markets, enhancing diversification. Remember to periodically review and adjust your asset allocation. This ensures your portfolio remains aligned with your evolving financial goals and risk tolerance, keeping you on track for long-term success.
Thanks for watching. If this was helpful, leave a like and consider subscribing. See you next time.